right, if you think the economy is improving, jobs are growing, and the worst is over, our next guest says, sadly, you are dead wrong.
Joining us now, the author of The Real Crash, Peter Schiff. Pete, thanks for joining us. What do you mean? The worst isn't over? We're not turning the corner? Things aren't getting better?
Hardly. We've actually made all the problems worse. You know, when I wrote my original book, Crash Proof, How to Profit from the Coming Economic Collapse, in that book, I forecast the bursting of the housing bubble, the ensuing financial crisis, this Great Recession. But what I was really concerned about was not that. I thought the crash was going to come from what the government would do to try to revive the economy. That was the real crash. It's still yet to come, and it is the subject of this new book.
So you don't think anything has changed that allowed this crash to happen in the fall of 2008?
No, the problems are much worse. We're much more deeply indebted now than we were then. All the problems have been exacerbated. And what we have now is not a legitimate recovery. All we've done is borrow additional money and spent it. And we're counting the spending as economic growth when it's not. The debt is growing much faster than the GDP. And ultimately, we're going to have to pay this money back with interest. And the only thing that's keeping us afloat right now is 0% interest rates.
And why are they 0%?
Well, because the Fed...
It's counterintuitive that, you know, we keep telling people, you know, that debt clock right there is going to come back and bite us in the rear sometime, but it hasn't done it yet. There's no inflation.
Well, sure there is, and it's the inflation that's helping keep interest rates so low because the Fed is monetizing debt, it's printing money and buying treasuries. See, the biggest problem with the U.S. economy is that interest rates are too low. Interest rates are probably the most important price in a free market. They're involved in one side of every transaction. They need to be set by the market. Instead, we're setting interest rates the way the Soviet Union used to set the price of bread. And because they're too low, we borrow too much, we spend too much, we don't save enough, we don't produce enough.
You think we have to go bankrupt?
Well, we are bankrupt.
But you want us to declare bankruptcy?
Well, what we need to do, we have to let interest rates rise. But the problem is, when interest rates go up, the U.S. government can't afford to pay the interest on the debt, let alone the principal.
What do you mean let interest rates rise?
Well, the Fed is keeping them down.
Yeah, but you're saying eliminate the Fed then?
Well, no, the Fed just has to let interest rates go up. The Fed has to stop buying bonds.
They set a rate. And they set the rate at 0 right now. So
right, but that's too low. Let the market set the rate. How can the rate be 0?
You just said, on one hand, let the Fed set the rate, but then on the other hand, let the market set it. It's either one or the other.
Right. Well, the Fed can still be there and not set rates. It can let the market do it. Or the Fed has to move rates higher because rates are much too low. Nobody can make any money saving. Nobody's saving, so we don't have any legitimate capital to finance investment. We have to borrow it all from abroad. But when we let interest rates go up, the U.S. government can't pay its debts. Many of our major banks are going to fail. You think that $2 billion loss at J.P. Morgan is big. Wait till you see how much J.P. Morgan and Morgan Stanley and Bank of America are going to lose if the Fed lets interest rates go to where they need to go.
The name of the book is The Real Crash. Peter Schiff is just getting started. The book just came out, and he predicted everything that's happened before. And I hope you're wrong, but you seem very confident that you're right now. Peter, thanks so much.
Sure.
Thank you, Peter.
The newsroom.
Thanks. Peter Schiff is here to say, blame the government for what you're seeing in Facebook shares. He's the CEO of Euro-Pacific Capital. Explain, Mr. Schiff.
Well, first of all, the government finally gave people permission to buy Facebook when the valuation was $104 billion. You know, the reason companies like Facebook can't go public earlier on is because it's too expensive thanks to the government. Now all the opportunities belong to the venture capitalists, you know, the private equity guys. They get in on the ground floor. The government has made it impossible for small investors to buy. They're now the exit strategy.
Well,
they're how everybody else cashes in.
Groupon was only 3 years old when it went public, and that tanked too.
Well, because, they also bring public companies that have massive valuations that don't even need capital. You see, small companies that actually need capital to grow, they can't afford to go public. It's only these monster companies that can have sky-high valuations that the investment banks can afford to take public. But now it's just a casino, and by the time the small investor gets a shot, there's far more downside risk than upside potential.
No, there was no bigger casino than the dot-com bubble when you had companies with no earnings going public, and you had these massive stock pops, just like the Globe.com did.
Yeah.
So what you're asking for is what we've already lived through, which was a nightmare.
No, we should have learned our lesson. Remember, I was a real-time critic of Wall Street screwing over their customers by bringing those dot-coms public. But we overreacted. All the legislation that we wrote after the fact, we closed the door after the horses had left the barn, and now good companies can't get capital at an early stage because of what the government did. No, I actually went over this. I got a new book, The Real Crash, just coming out today. I've got a chapter on overregulation in the financial sector, how it backfires, how the government tries to protect the small investor, and now because of all the regulation, the small investor is the one that's holding the bag. And the 1% get richer because the government won't let the 99% make good investments.
Facebook could have gone public a lot earlier than it decided to, Peter. You will admit that.
Well, that was, look, it's not all about Facebook, but the reason they didn't want to do that is because they knew that Wall Street could manufacture this big pop. But you know, at the end of the day, if this stock really tanks, Zuckerberg didn't really sell a lot of stock. He sold enough stock just to pay his taxes.
Right.
Maybe if he would have sold a smaller percentage of the public, of his company to the public at a better deal than what he got from those VCs, you know, maybe he would end up with a lot more money. He could end up, it could all be on paper. All this wealth could vanish. I mean, sure, Zuckerberg cashed out with a few $100 million, but maybe had he gone public sooner with less fanfare and he sold less of his company to real investors at a better deal instead of the VCs who wanted to flip it in the IPO, maybe it would have been better for Facebook. And maybe it would be better for the capital markets and for the
I'm personally not craving to go back to the days of Pets.com where you had these skyrocketing IPOs and everybody thought they were going to get rich and then they didn't. Peter, I know we have to go because you have.
You don't throw the baby out with the bathwater. Yes, people acted stupid during the dot-coms, but we don't act even stupider with the regulations that we put on the capital markets in the wake of that.
Peter Schiff, it was great to talk to you, Peter. You take care. Be well. Come back soon of your Pacific Capital.
There's some major developments in the financial crisis in Europe. An aid package coming to the rescue of Spain, specifically Spain's troubled banks, worth as much as $125 billion. Stock markets in Europe initially reacted well, but finished the day mixed, and Wall Street today down just a little bit, 33 points in the Dow. Alarm bells, though, are also ringing for banks in this country. Moody's is expected to announce this week the downgrade of 17 global banks, including some of the biggest U.S. financial firms. Joining us live, Peter Schiff, president of Euro Pacific Capital and author of the new book, America's Coming Bankruptcy, How to Save Yourself and Your Country. On that optimistic note, as always, Peter, nice to have you back with us.
Thanks for having me on.
Let's talk a little bit about the banks first. I know this has been telegraphed that potentially these downgrades could be coming. What does it mean for us?
Well, first of all, I don't think the downgrades will go far enough. I think the banks are in a lot worse shape than some of these rating agencies appreciate. But we have to understand, why is it that banks are in so much trouble? And the reason is because of all the government involvement in the banking sector. It's the government involvement that subsidizes all of their risk-taking. The banks are in so much debt because the government has led them down this primrose path. And then we think bailouts are a solution. It's just a moral hazard. It encourages more of the same bad behavior that government policy created in the first place. So I think we really need to get the government out of the banking sector as much as possible. But I already believe that they've done so much damage that many of our major banks in this country, I believe, are going to fail in a more spectacular way than they did in 2008. As soon as the Fed loses control of interest rates and they go a lot higher, I think these big banks are going to fail, and there's going to be huge losses as a result.
You're not alone, but we should point out to our viewers that this is your opinion on the way that you're looking at the financial sector right now. Is there a timeline you have? Do you see these bank failures happening soon, 5, 10 years from now, or sooner than that?
Well, I think it'll be sooner than that. I mean, right now we're buying some time based on the problems in Europe because people are so worried about the euro and the eurozone. They're taking refuge in the dollar and the treasury market, and that is temporarily keeping our interest rates lower and allowing our government to keep on spending and Americans to keep on borrowing and spending. But eventually, we're not going to be able to do that anymore. People are going to be worried about all the money we're printing, all the inflation we're creating, and interest rates, I think, are going to move up in a very spectacular way. And we are so leveraged, we can't handle it. Not only can't the banks handle it, the federal government can't handle it. I mean, our government can no more handle a 5 or a 7 or a 10% interest rate than can the government in Greece or Italy or Spain.
Peter, I just want to point out to our viewers, we're trying to get your camera back centered if we can. It's always good to have our guests in the middle of the screen, and sometimes it happens and sometimes it doesn't. But Peter, we're still listening to what you have to say. And there's been calls, people on the maybe sharing a different opinion from you say, listen, the United States government has to get even more involved in Europe, because if we don't get more involved now and jump in whatever way that means, and there's a lack of specifics on that, then that's going to just crush us 6, 12,
Well, how
18
can
months
we
from
get
now.
involved when we're already broke? Our government is running a budget deficit of almost $1.5 trillion a year. We're drowning in debt. All we can do is print money.
So,
so
Peter,
we're printing all this money right now to bridge the gap between what we collect in tax and what we spend. So we're just going to print even more money and give it to the Europeans? How is that going to help?
Let me just ask you real quick, because I have to run. You're a financial advisor. You give a lot of advice out there. Again, it's your opinion, but what advice do you give to some of your customers and the average person out there on how to protect themselves?
Well, I outlined a chapter in my latest book, the America's Coming Bankruptcy. You get out of anything that these central banks are printing, particularly dollars. I think you buy gold, you buy silver, you look at some of the emerging economies, buy stocks abroad, buy bonds from in better currencies than the ones that are being run off the printing presses. We have a huge financial crisis coming. It's not in our past. It's in our future. And these downgrades in the banks, this is just the beginning. It's going to get a lot worse. Europe is simply a precursor of what's going to happen in the United States. That's the preview. The main show is going to be playing out here in the United States on this side of the Atlantic, and people had better be prepared for it.
Peter, you give us a lot to think about today, that's for sure, on a Monday morning. Thank you again for joining us. We love having you, and we look forward to having you back. Thank you.